Chapter number 3, ICAI study material questions. Under that first one, test your understanding. Question number 1. XWL Limited was engaged in dealing in commodity futures trading based in Surat. CAP, based at Delhi, was auditor of the company. The auditor did not even once visit office of the company and failed to understand the nature of the business of the company. All the papers and account books were received on emails and audit was concluded. There were also included in his working papers checklists which had a requirement of test checking of cost of raw materials consumed and cost of stores and spares. There was nothing in his working papers showing understanding of the nature of business of the company. What does it reflect upon? Planning of audit by CAP. The answer to the question is SA 300 requires the auditor to plan the audit in such a manner that it is performed effectively. It also requires auditor to establish overall audit strategy, including identifying the characteristics of the engagement, facilitating him to define its scope and planning of the nature, timing, and extent of the audit procedures required to be performed to achieve the objective of the auditor. SA 300 further requires the auditor to document the overall audit strategy, the audit plan, and any significant changes made during the audit engagements to such plans. In the given situation, auditor did not even once visit the company and failed to understand about the business of the company. Therefore, he has floated requirements of SA 300 to plan the audit in such a manner that it is performed effectively. The auditor has to plan the audit commensurate to the nature and complexity of the business of the entity and identify and assess the risk of material misstatements. Further, working papers of the auditor also do not show his understanding of the nature of the business, which is again a blatant violation of a requirement of SA 300, which requires the auditor to document the overall audit strategy, the audit plan, and any significant changes made during the audit engagement to such plans. Inclusion of a checklist in working papers having a requirement of test checking of cost of raw materials consumed and cost of stores and spares show that it was the general checklist and specifics of the business were never understood and the audit was not planned to be conducted in an effective manner in accordance with the requirements of SA 300. Next question. Test your understanding. Question number 2. CAP is planning for audit of a listed company headquartered in Noida. While doing this exercise, he has made a list of various procedures intended to be performed by him during the course of audit. He has further made up his mind to decide about the sample size at the time of performing various planned procedures. Is above approach proper? Is above approach proper? The answer is SA 300 states that audit plan shall include description about nature, timing, and extent of the audit procedures. The extent of the audit procedures also includes deciding about sample sizes to be tested for performing audit procedures. Therefore, the said approach is not proper. Various procedures planned to be undertaken should also include considerations relating to sample sizes to be tested. Next question. Question number 3. Test your understanding. Question number 3. CAN is conducting audit of a leading society engaged in promoting awareness regarding usefulness of internet among the disadvantaged sections of society through easily understandable means and methods. The society is also registered under FCRA 2010 for receipt of the foreign contributions. During the course of audit, she embarked upon extensive procedures relating to verification of receipts of foreign contributions to rule out round tripping in comparison to procedures originally thought of. She is documenting various procedures performed by her, including relevant audit findings. However, she does not feel need for putting into writing about how she planned the whole exercise. Does she require refreshing of her knowledge? The answer to the question is yes. SA 300 requires auditor to document audit plan and significant changes made during the audit engagement to the audit plan. It also requires auditor to document reasons for such changes. The documentation of the audit plan is a record of the planned nature, timing, and extent of the risk assessment procedures and further audit procedures at the assertion level in response to the assessed risks. It also serves as a record of the proper planning of the audit procedures that can be reviewed and approved prior to their performance. Further, changes in audit plan, along with reasons thereof, due to embarking upon extensive procedures relating to verification of foreign contributions in comparison to what was originally envisaged, need to be documented. Failure to document audit plan could entail risk of not conducting audit according to professional standards in a qualitative manner. Next question. Test your understanding. Question number 4. CAS is engagement partner conducting statutory audit of BBI Bank for STB and Associates. The bank has 1034 branches spread all over the country, which are audited by the branch auditors. In respect of one large branch audited by a branch auditor, there were errors in NPA classification of many advances which were not pointed out by the branch auditor in his report. Through memorandum of changes and nil memorandum of changes was reported electronically. During overall review of financial statements of the bank by statutory auditor, the above said errors did not come into light. The statutory auditor had also called soft copies of internal inspection report and concurrent audit reports of above branch as part of overall review procedures. However, these reports did not point towards any irregularities in such accounts. Would statutory auditor of the bank be liable for above lapses? What precautions have to be taken by him while expressing opinion considering possibilities of such situations? The answer to that question is SA 600 states that the principal auditor would not be responsible in respect of the work entrusted to the other auditors, except in circumstances which should have aroused his suspicion about the reliability of the work performed by the other auditors. When the principal auditor has to base his opinion on the financial information of the entity as a whole, relying upon the statements and reports of the other auditors, his report should state clearly the division of responsibility for the financial information of the entity by indicating the extent to which the financial information of components audited by the other auditors have been included in the financial information of the entity. Example, the number of divisions, branches, subsidiaries, or other components audited by other auditors. In the given situation, nothing has come to light of the statutory auditor which would arouse his suspicion about reliability of the work performed by branch auditor. Therefore, he would not be responsible for the work performed by branch auditor. Further, it should be clearly stated in the report that 1034 branches of the bank have been audited by branch auditors. Next question. Test your understanding. Question number 5. CAK is conducting statutory audit of a listed company, Live with Nature Limited. The company is engaged in producing environment friendly niche products for newborn babies. There is also a well functioning internal audit department in the company. On perusal of internal audit reports, he finds that not only verification of inventories was attended by internal auditor at regular intervals during the year, workings were also made in respect of the inventory valuation as at year end. He has also attended inventory count at the end of the financial year, and no prima facie adverse inferences were drawn by him. However, on going through inventory reports, he gathers that inventories are being held for considerably longer period before being sold. The internal audit reports have not taken this aspect into consideration. Should he choose to rely upon the inventory valuation work performed by internal auditor? The answer to this question is For a particular account balance, class of transaction, or disclosure, the higher an assessed risk of material misstatements at the accession level, the more judgment is often involved in planning and performing the audit procedures and evaluating the results thereof. In such circumstances, the external auditor will need to perform more procedures directly and accordingly make less use of work of the internal audit function in obtaining sufficient appropriate audit evidence. Furthermore, as explained in SA 200, the higher the assessed risks of material misstatements, the more persuasive the audit evidence required by the external auditor will need to be, and therefore the external auditor will need to perform more of the work directly. In the given situation, inventories are being held for considerably longer period before being sold. As companies dealing in niche products for newborn babies, there is a risk of inventory obsolescence due to changes in the customer preferences. It carries a significant risk of material misstatements and requires more judgment on part of the statutory auditor in planning and performing procedures. In such situations or circumstances, statutory auditor need to perform procedures directly like comparing net realizable value of the products with costs to verify completeness of the provisions, recomputing of provisions for obsolete stocks obsolete stocks. Therefore, in the given situation, he should perform procedures directly in accordance with SA 610. Next question, illustration 1. CAA, a practicing CA, has been appointed as an internal auditor of T Limited. He conducted the physical verification of the inventory at the year end and handed over the report of such verification to CAK, the statutory auditor of the company, for his view and reporting. Can CAK rely on such report? Using the work of internal auditor. As per SS 16, using the work of internal auditors, while determining whether the work of the internal auditors can be used for the purpose of the audit, the external auditor shall evaluate extent to which the internal auditors organizational status, organizational status, and relevant policies and procedures support the objectivity of the internal auditors, level of competency of the internal audit function, and whether the internal audit function applies a systematic and disciplined approach, including quality control. Further, the external auditor shall not use the work of internal audit function if the external auditor determines that the function's organizational status and relevant policies and procedures do not adequately support the objectivity of the internal auditors, the function lacks sufficient competence, or function does not apply a systematic and disciplined approach, including quality control. In the instant case, CAK should ascertain the internal auditor's scope of verification, area of coverage, and method of verification. He should review the report on physical verification, taking into consideration these factors. If possible, he should also test check a few items, and he can also observe the procedures performed by the internal auditors. If the statutory auditor is satisfied about the appropriateness of the verification, he can rely on the report. But if he finds that the verification is not in order, he has to decide otherwise. The final responsibility to express opinion on the financial statements remains with the statutory auditor. Next question, illustration 2. While doing audit, RAM, the auditor, requires reports from experts for the purpose of audit evidence. What type of reports or opinions he can obtain and to what extent he can rely upon the same using the work of an auditor's expert. As per SA 620, using the work of an auditor's expert during the audit, the auditor may seek to obtain, in conjunction with the client or independently, audit evidence in the form of reports, opinions, valuations, and statements of an expert. While doing audit, RAM, the auditor, can obtain the following types of reports or options as statements of an expert for the purpose of audit evidence. First one, the valuation of complex financial instruments, land and buildings, plant and machinery, jewelry, work of art, antiques, intangible assets, assets acquired and liabilities assumed in business combinations, and assets that may have been impaired. The actuarial calculation of liabilities associated with insurance contracts or employee benefits plans. estimation of oil and gas reserves, valuation of environmental liabilities, and site cleanup costs, the interpretation of the contracts, laws and regulations, analysis of the complex or unusual tax compliance issues. When the auditor intends to use the work of an expert, he shall evaluate the adequacy of the auditor's expert's work, including the relevance and reasonableness of that expert's findings or conclusions, and their consistency with other audit evidence. If that expert's work involves use of significant assumptions and methods, the relevance and reasonableness of those assumptions and methods in the circumstances, and if that expert's work involves the use of source data that is significant to his work, the relevance, completeness, and accuracy of that source data. If the auditor determines that the work of the auditor's expert is not adequate for the auditor's purpose, he shall agree with that expert on the nature and extent of the further work to be performed by that expert, or perform further audit procedures appropriate to the circumstances. Next, test your knowledge questions. Question number 1. While auditing Z Limited, you observe certain material financial statement assertions have been based on estimates made by the management. As the auditor, how do you minimize the risk of material misstatements? As per SA 540, auditing accounting estimates, including fair value accounting estimates and related disclosures, the auditor shall obtain an understanding of the following in order to provide a basis for the identification and assessment of the risks of material misstatements for accounting estimates. The requirements of the applicable financial reporting framework relevant to the accounting estimates, including related disclosures, how management identifies those transactions, events, and conditions that may give rise to the need for accounting estimates to be recognized or disclosed in the financial statements. In obtaining this understanding, the auditor shall make enquiries of the management about changes in circumstances that may give rise to new or the need to revise existing accounting estimates. The estimation making process adopted by the management, including the method, including where applicable the model used in making the accounting estimates, relevant controls, whether management has used an expert, the assumption underlying the accounting estimates, whether there has been there has been or ought to have been a change from the prior periods in the method for making the accounting estimates, and if so, why, and whether, and if so, how the management has assessed the effect of estimation uncertainty. Next question, question number 2. KRP Limited, at its annual general meeting, appointed Mr. X, Mr. Y, and Mr. Z as joint auditors to conduct audit for the financial year 22-23. For the valuation of gratuity scheme of the company, Mr. X, Mr. Y, and Mr. Z wanted to refer their own known actuaries. Due to difference of opinion, all the joint auditors consulted their respective actuaries. Subsequently, major difference was found in the actuarial reports. However, Mr. X agreed to Mr. Y's actuary report, though Mr. Z did not. Mr. X contends that Mr. Y's actuary report shall be considered in the audit report due to majority of the votes. Now Mr. Z is in dilemma. Explain the responsibilities of the auditors in case a report made by Y's actuary later on was found faulty. Using the work of an auditor's expert. As per SS 620, using the work of an auditor's expert, the expertise of an expert may be required in the actuary calculation of liabilities associated with insurance contracts or employee benefits plans, etc. However, the auditor has sole responsibility for the audit opinion expressed, and that responsibility is not reduced by the auditor's use of work of an auditor's expert. The auditor shall evaluate the adequacy of the auditor's expert work for the auditor's purposes, including the relevance and reasonableness of the expert's findings or conclusions and their consistency with other audit evidence as per SA 500. Further, in view of SA 620, if the expert's work involves use of significant assumptions and methods, then the relevance and reasonableness of those assumptions and methods must be ensured by the auditor. And if the expert's work involves the use of source data that is significant to the expert's work, the relevance, completeness, and accuracy of that source data in the circumstances must be verified by the auditor. In the instant case, Mr. X, Y, and Z, jointly appointed as auditors of KRP Limited, referred their own actuaries for evaluation of gratuity scheme. Actuaries are an auditor's experts as per SS 620. Mr. Y referred actuary has provided the gratuity valuation report, which later on was found faulty. Further, Mr. Z is not in agreement with this report. Therefore, he submitted a separate audit report specifically for such gratuity valuation. In such situation, it was the duty of Mr. X, Mr. Y, and Mr. Z before using the gratuity valuation report of actuary to ensure the relevance and reasonableness of assumptions and methods used. They were also required to examine the relevance, completeness, and accuracy of the source data used for such report before expressing their opinion. Mr. X and Y will be held responsible for gross negligence and using such faulty report without examining the adequacy of the expert actuary's work, whereas Mr. Z will not be held liable for the same due to the separate opinion expressed by him. Next question, test your knowledge. Question number 3. A&Co was appointed as auditor of Great Airways Limited. As the audit partner, what factors shall be considered in development of overall audit plan? Factors to be considered during developing of overall audit plan. Developing of an overall plan. Overall plan is basically intended to provide direction for audit work programming and includes the determination of timing, manpower development, and coordination of the work with the client, other auditors, and other experts. The auditor should consider following matters in developing his overall plan for the expected scope and conduct of the audit, terms of his engagement, and any statutory responsibilities, nature and timing of the reports or other communications, applicable legal or statutory requirements, accounting policies adopted by the clients, and changes, if any, in those policies, the effects of new accounting and auditing pronouncements on the audit, identification of significant audit areas, setting of materiality levels for the audit purpose, conditions requiring special attention, such as the possibility of a material fraud or error or involvement of the parties in whom directors are persons who are substantial owners of the entity are interested and with whom transactions are likely, degree of reliance to be placed on the accounting system and internal control, possible rotation of emphasis on specific audit areas, nature and extent of audit evidence to be obtained, work of the internal auditors, and the extent of the reliance on their work, if any, in the audit, involvement of other auditors in the audit of subsidiaries or branches of the client, and involvement of the experts, allocation of work to be undertaken between joint auditors, and the procedure for its control and review, establishing and coordinating staffing requirements. Next, test your knowledge. Question number 4. As an auditor of a garment manufacturing company for the last 5 years, you have observed that new venture of online shopping has been added by the company during the current year. What factors would be considered by you in formulating the audit strategy of the company? Formulation of audit strategy. While formulating the audit strategy for a company, following factors may be considered. General factors. General factors. First one, determination of characteristics of the audit. Identify the characteristics of the engagement that defines its scope. Second, reporting objectives. Ascertain the reporting objectives of the engagement to plan the timing of the audit and the nature of the communications required. Third, team's efforts. Consider the factors that, in the auditor's professional judgment, are significant in directing the engagement team's efforts. Fourth, considering results of preliminary engagement activities. consider the results of preliminary engagement activities and, where applicable, whether knowledge gained on other engagements performed by the engagement partner for the entity is relevant. Next, nature, timing, and extent of resources. Ascertain the nature, timing, and extent of resources necessary to perform the engagement. So, these are the general points. First one, determination of characteristics of the audit. Next, reporting objectives. Next, team's efforts. Fourth, considering result of preliminary engagement activities. Fifth, nature, timing, and extent of resources. Specific factors for online shopping. The auditor shall also obtain an understanding of the information system, including the related business process due to new venture of online shopping in the following areas. The class of transactions in the entity's operations that are significant to the financial statements, the procedures within both information technology and manual systems by which those transactions are initiated, recorded, processed, corrected as necessary, transferred to the general ledger, and reported in the financial statements of the related accounting records, supporting information, and specific accounts in the financial statements of that are used to initiate, record, process, and report transactions. This includes the correction of incorrect information and how information is transferred to the general ledger. The records may be in either manual or electronic form. How the information system captures events and conditions other than transactions that are significant to the financial statements, controls surrounding journal entries, including non-standard journal entries, use it to record non-recurring, unusual transactions or adjustments. Next question, question number 5. During the audit of FMP Limited, a listed company, engagement partner completed his reviews and also ensured compliance with independence requirements that apply to the audit engagement. The engagement files were also reviewed by EQCR, Engagement Quality Control Reviewer, except the independence assessment documentation. Engagement partner was of the view that matters related to independence assessment are the responsibility of engagement partner and not the engagement quality control reviewer. Engagement quality control reviewer objected to this and has refused to sign off the documentation. Please advise as per SA 220. As per SA 220, engagement partner shall form a conclusion on compliance with the independence requirements that apply to the audit engagement. In doing so, engagement partner shall obtain relevant information from the firm and, where applicable, network firms to identify and evaluate circumstances and relationships that create threats to independence. Evaluate information on identified breaches, if any, of the firm's independence policies and procedures to determine whether they create a threat to independence for the audit engagement, and take appropriate action to eliminate such threats or reduce them to an acceptable level by applying safeguards, or by considered appropriate to withdraw from the audit engagement where withdrawal is permitted by law or regulation. The engagement partner shall promptly report to the firm any inability to resolve the matter for the appropriate action. Engagement partner shall take responsibility for reviews being performed in accordance with the firm reviews policies, firm's review policies and procedures. As per SA 220, quality control for an audit of financial statements. For audits of financial statements of listed entities, Engagement Quality Control Reviewer (EQCR), on performing an engagement quality control review, shall also consider the engagement team's evaluation of the firm's independence in relation to the audit engagement. In the given case, engagement partner is not right. The independence assessment documentation should also be given to engagement quality control reviewer for his review. Next, test your knowledge question number 6. AKJ Limited is a small sized 30 years old company having business of manufacturing of pipes. Company has a plant based out of Dehradun and have their corporate office in Delhi. Recently, the company appointed a new firm of chartered accountants as their statutory auditors. The statutory auditors wants to enter into an engagement letter with the company in respect of their services, but the management has contended that since the statutory auditor is mandated by law, engagement letter may not be required. Auditors did not agree to this and have shared a format of engagement letter with the management for the reference before getting that signed. In this respect, management would like to understand that as per SA 210, audit standard referred to by the auditors, if the agreed terms of the engagement shall be recorded in an engagement letter or other suitable form of written agreement, what should be the included in terms of agreed audit engagement letter? The answer to this question is, as per SA 210, agreeing the terms of audit engagements, the auditor shall agree the terms of audit engagement with management or those charged with governance as appropriate. The agreed terms of audit engagement shall be recorded in an audit engagement letter or other suitable form of written agreements and shall include the objective and the scope of the audit of financial statements, the responsibilities of the auditor, the responsibilities of the management, identification of the applicable financial reporting framework for the preparation of the financial statements, and a reference to the expected form and content of any reports to be issued by the auditor, and a statement that there may be circumstances in which a report may differ from its expected form and content. Next, test your knowledge question number 7. A private company is engaged in the business of real estate. The auditor of the company requested the information from the management to review the outcome of accounting estimates like estimated costs considered for percentage completion, etc., included in the prior period financial statements and their subsequent re-estimate of for the purpose of current period. The management has refused the information to the auditor, saying that the review of prior period information should not be done by the auditor. Please advise. As per SA 540, auditing accounting estimates, including fair value accounting estimates and related disclosures, the auditor shall review the outcome of accounting estimates, including the prior period financial statements, or where applicable, their subsequent re-estimate for the purpose of the current period. The nature and extent of the auditor's review takes account of the nature of the accounting estimates and whether the information obtained from the review would be relevant to identifying and assessing a risk of material misstatements of accounting estimates made in the current period financial statements. The outcome of an accounting estimate will often differ from the accounting estimate recognized in the prior period financial statements. By performing risk assessment procedures to identify and understand the reasons for such differences, the auditor may obtain information regarding the effectiveness of the management's prior period estimation process, for which the auditor can judge the likely effectiveness of the management's current process. Audit evidence that is pertinent to the re-estimation in the current period of prior period accounting estimates. Audit evidence of matters such as estimation uncertainty that may be required to be disclosed in the financial statements. The review of prior period accounting estimates may also assist the auditor in the current period in identifying circumstances or conditions that increase the susceptibility of accounting estimates to or indicate the presence of possible management bias. The auditor's professional skepticism assists in identifying such circumstances or conditions and in determining the nature, timing, and extent of further audit procedures. However, the review is not intended to call into question the judgments made in the prior periods that were based on information available at the time. In the given case, the management is not correct in refusing the relevant information to the auditor. Next question, question number 8. Test your knowledge, question number 8. X Limited had a net worth of 1,300 crores, because of which India's became applicable to them. The company had various derivative contracts, options, forward contracts, interest rate swaps, etc., which were required to be fair valued, for which company got the fair valuation done through an external third party. The statutory auditor of the company involved an auditor's expert to audit valuation of derivatives. Auditor and auditor's expert were new to each other. That is, They were working for the first time together but developed a good bonding during the course of audit. The auditor did not enter into any formal agreement with the auditor's expert. Please advise. As per SS 620, using the work of an auditor's expert, the nature, scope, and objectives of the auditor's expert work may vary considerably with the circumstances, as may the respective roles and responsibilities of the auditor and the auditor's expert, and the nature, timing, and extent of the communication between the auditor and the auditor's expert. It is therefore required that these matters are agreed between the auditor and the auditor's expert. In certain situations, the need for a detailed agreement in writing is required, like the auditor's expert will have access to sensitive or confidential entity information. The matter to which the auditor expert's work relates is highly complex. The auditor has not previously used work performed by that expert. The greater the extent of auditor's expert's work and its significance in the context of the auditor in the given situation, considering the complexity involved in the valuation and the volume of derivatives, and also due to the fact that the auditor and the auditor's expert were new to each other, auditor should have signed a formal agreement or engagement letter with the auditor's expert in respect of the work assigned to him. Next, test your knowledge question number 9. Cineplex, a movie theater complex, is the foremost theater located in Delhi. Along with the sale of tickets over the counter and online booking, the major portion of the income is from the cave, shops, pubs, etc. located in the complex. Its other income includes advertisements exhibited within or outside the premises, such as hoardings, banners, slides, short films, etc. The facility for parking of the vehicle is also provided in the basement of the premises. Cineplex appointed your firm as auditor of the entity. Being the head of the audit team, you are therefore required to draw an audit program initially in respect of its revenue and expenditure, considering the above mentioned facts along with other relevant points relating to such complex audit program of movie theater complex. Peruse the memorandum of association and articles of association of the entity. Ensure the object clause permits the entity to engage in this type of business. In the case of income from sale of tickets, verify the control system as to how it is ensured that the collections on the sale of tickets of various shows are properly and accurately accounted. Verify the system relating to online booking of the various shows and the system of realization of money. Check that there is overall system of reconciliation of collections with the number of seats available for different shows in a day. Verify the internal control system and its effectiveness relating to the income from cave, shops, pubs, game zones, etc. located within the multiplex. Verify the system of control exercised relating to the income receivable from advertisements exhibited within the premises and inside the hall, such as hoardings, banners, slides, short films, etc. Verify the system of collection from the parking areas in respect of the vehicles parked by the customer. In case of payment to the distributors, verify the system of payments, which may be either through outright payment or percentage of the collection or combination of the both. Ensure at the time of settlement any payment of advance made to the distributor is also adjusted against the amount due. Verify the system of payment of salaries and other benefits to the employees and ensure that statutory requirements are complied with. Verify the payments affected in respect of maintenance of the buildings and ensure that same is in order. Verify the insurance premium paid and ensure it covers the entire assets. Integrated case scenario. CAA has been offered appointment as auditor of an NSE listed company. She has already ticked checkboxes relating to her independence vis-a-vis company and the integrity of the promoters and key management personnel. Being satisfied on this count, and after sending formal engagement letter to the company, she is in the midst of planning activities for company's audit. Owner of countries, one of the topmost writing instrument brands above said company is in business of producing ball pens, gel pens, markers, folders, and such general stationery products. Business profile of the company, including its brief history, detail of its key managerial persons, and brief description of the company's activities, was obtained by her. She has also studied reports relating to growth of India's stationery market due to greater demand and impact of the government driven schemes like Sarva Shiksha Abhiyan SSA. Besides, she has also obtained risk management policy of the company, which contained company's strategy to contain various risks. On perusal of financial statements of the company, it is noticed that the company's investors, as at close of the financial year, stood at 200 crores, which constitutes about 25% of its total assets. She is planning to identify significant audit risks pertaining to valuation of the inventories. She is also considering about materiality level for financial statements as a whole. Keeping in view above, answer the following questions. The compliance with independence requirements and verification of integrity of the promoters and key managerial personnel has been ensured by CAA. In this regard, which of the following statement is likely to be complete statement? First one, such activities are required to be performed strictly in terms of requirements and procedures outlined in Code of Ethics issued by ICAI. Second, such activities are required to be performed in respect of an audit engagement in accordance with SA 220, and these preliminary engagement activities are specifically identified in SA 210. Such activities are required to be performed in respect of an audit engagement in accordance with SA 220, and these preliminary engagement activities form part of planning and audit in accordance with SA 300. Such activities are required to be performed in terms of requirements and procedures outlined in Code of Ethics issued by ICAI and are specifically identified in SA 210. The answer is B. Such activities are required to be performed in respect of an audit engagement in accordance with SA 220, and these preliminary engagement activities are specifically identified in SA 210. Second, the auditor has obtained risk management policy of the company. Which of the following statement is most appropriate in this regard? The understanding of a company's risk management policy is required by auditor. It may help the auditor in identifying a risk of material misstatements that management fails to identify. Second, the understanding of the company's risk management policy is not required by the auditor. It deals with business risks of the company. Audit risk is not influenced by company's business risks. Third, the understanding of the company's risk management policy is required by the auditor. However, it cannot help the auditor in identifying risk of material misstatements that management fails to identify. Fourth, the understanding of the company's risk management policy is sufficient for an auditor to develop an audit plan. Option A is correct. The understanding of the company's risk management policy is required by auditor. It may help the auditor in identifying risks of material misstatements that management fail to identify. Third one, which of the following is not likely to be a procedure for auditor to understand the company? Performing an online search to identify press reports relating to the company, reviewing an new SEBI and stock exchange requirements, reviewing whether fresh monies were raised from the public, seeking confirmation letters from bankers regarding outstanding balances. Option D is correct. Seeking confirmation letters from bankers regarding outstanding balances needs to be done. Fourth one, considering auditor's intention to identify significant audit risks pertaining to inventory valuation, which of the following statements is likely to be true? First one, procedures plan to identify significant audit risks pertaining to inventory valuation forms part of a overall audit plan. Second, procedures plan to identify significant audit risks pertaining to inventory valuation forms part of overall audit strategy. Third, procedures plan to identify significant audit risks pertaining to inventory valuation forms part of test of controls. Fourth, procedures planned to identify significant audit risks pertaining to inventory valuation forms part of a test of details. Option A is correct. Procedures planned to identify significant audit risks pertaining to inventory valuation forms part of overall audit plan. Next, in relation to materiality levels for financial statements as a whole, which of the following statements are most appropriate? First option, materiality has to be decided by the auditor after identification and assessment of risks of material misstatements. Second, materiality has to be decided by the auditor prior to identification and assessment of the risks of material misstatements. Third, materiality has to be decided by the auditor after performing risk assessment procedures. Fourth, materiality has to be decided by the auditor at times of designing test of controls and substantive procedures. Option B is correct. Materiality has to be decided by the auditor prior to identification and assessment of the risk of material misstatements.